Economic outlook. It held its forecast for 2022 at 4.9%. But what about the risks posed by inflation? Geeta Gopinath is the IMF's chief economist.
Our best guess, which is what is in our model forecast, is that this will be relatively well contained. So there will be some tightening in financial conditions, but nothing to throw off the recovery. So this is why we expect global economies to continue to grow next year at the rate of 4.9%.
Wells Fargo CEO Charlie Scharf says inflation has arrived and pieces of it are here to stay. He spoke virtually to the Institute of International Finance. Wells Fargo, which reports on Thursday, shares down now by 1.3%. American Airlines Group and Southwest Airlines say they will follow President Biden's mandate requiring that employees be vaccinated against COVID-19, defying an order from the Texas governor blocking such actions. Southwest Airlines shares right now up by 1%, American up by 0.8%. And that's Bay State Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So this is one of our most read stories on the Bloomberg today. It's about a little notice change to Citigroup's rewards for top execs and how it has set off one of the bank's most prominent detractors.
Jenny Serrain is joining us. She's finance reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studio. So
we're in leather, looking pretty wild. I'm
check it out on YouTube.
Loving it. YouTube, you can see the leather jacket. I'm loving it. Thank you. You're welcome.
Jenny, what is this? What was this change in the regulatory filing, and why is Wells Fargo's Mike Mayo drawing attention to it?
Yeah, it was interesting because it was very little notice. It came out on a quiet summer Friday.
Always does, right? Those little things.
So that was part of his concern. But I think his bigger concern was really just, they're setting up a new bonus program for some of their new CEO, Jane Fraser's, her top deputies. So Paco Ibarra, he's their head of Institutional Clients Group, Chief Financial Officer Mike Mason, their head of Enterprise Ops and Tech, Mike Whitaker. They're all eligible for $5 million apiece over the next few years if they can hit some targets around where the stock price goes and what Citi is doing to clean up the bank. But Wells Fargo's big issue with this is just that Citi didn't really disclose what those targets were. So there's, a lot of specificity on the money at stake, but not a lot of specificity on the targets themselves. And so he's just calling fresh attention to this, saying they need to do better.
I got to read the quote. That's like my favorite quote from me. You guys all know what I'm going to read. Mike Mayo said in a note to clients, quote, "That's like charging us for dinner before we know if we're getting hot dogs or caviar."
Mm-hmm. Ouch. Yes. Well, and this is someone who's been a critic of Citi, correct?
Yes.
We all know Mike Mayo. The Bloomberg audience knows who he is. He was just on TV passing around popcorn. We'll talk about that later.
Yes. So he's very known for his very fiery exchanges with Citigroup executives for a long, long time now. Has been covering this stock for a while. Interestingly, he's actually overweight on the stock. He's recommending that this is a buy. So, there's, I think, a little bit of good and a little bit of bad here. He thinks there's a long way for this company to go, and he seems to believe that their new CEO, Jane Fraser, is a change agent that can accomplish that, but, still holding their feet to the fire on this.
Well, so help me out. This happens, right? A lot of firms, a lot of companies in general, publicly held companies, pick your industry, there are incentives that are given to senior execs to bring about XYZ at a company. Is it just that it came out late on a summer Friday? What is it that's so different or troubling?
I think just the fact that there's not a lot of disclosure around what these targets actually are. Like, what are you hoping your stock price will get to? What are they really responsible for in this turnaround at Citi? It's important to remember Citi is in the middle of a years-long overhaul of all of their internal systems ordered by regulators late last year. This is a really important time for them, and it's important that they have their executives on board and that they have skin in the game in accomplishing that, but they need to be really clear, I think, with investors exactly what they're hoping to get out of this.
All right, two things. One would say, that's your job. Why do you need to be incented with a bonus to do it? Secondly, because you're such a great reporter, I'm assuming at some point you'd recently reached out to Citi about this and said, what's the deal? What are the metrics?
Yeah, so we reached out for comment. They declined. And I think, we have an investor day set for next year where I think a lot more information will get shared about this. They just announced that it's going to be on March 2nd, so that's about a year after Jane took over. So we'll see. I think we're going to get more and more, but a lot of times with this regulatory stuff, cities' hands are really tied in terms of what they can actually say. Their regulators keep it very, very tightly controlled. So I do, have a little bit of sympathy for them on the one hand, but on the other hand, we're journalists. We like a lot of transparency. So I think there's a little bit of a balancing work that city has to do here. And Mike Mayo is just saying they've come out on the wrong side on this one.
Well, characterize for us, Jenny, what the challenges the bank has faced in recent years and what Fraser is trying to do.
Yeah, so the consent orders that they got hit with last year were really about a lot of the underlying risk management and internal controls. And so that's the stuff that, runs all of the kind of underlying operations and really everything the bank does with our data and all this stuff. So this is a big overhaul that's going to be in front of them. And they do need to have senior leadership buying in and really paying attention, never dropping the ball. And I think that's what they were trying to do with this program. And they've even said, we're naming these 3 officers, but we're going to have this apply to a lot of our top executives. And that's what regulators actually wanted from them. If you actually read the consent orders, they said, we want you to be making sure that you've got, compensation programs that are tied to this effort. So I think, we'll see a lot. We won't see a lot, but the bank has said they're very focused on this, and it's a years-long process that's not going to be easy to solve.
I'm not fast enough, but I'm trying to look up Mark Mason, who's the Chief Financial Officer at Citigroup, just quickly, kind of what his compensation is. And I mean, he's already making $5.9 million in cash, $6.1 million in non-cash. It's a pretty nice salary, and I know people.
I wouldn't say no to it.
No, and I know folks on Wall Street get paid a lot of money, but again, going back to the argument, that's your job to make sure the right system's in place. Why do we need to layer something on top to make sure that those systems, the right systems, are in place? And forgive me, I don't mean to single out Mark. That's the page I pulled up on the Bloomberg.
Yeah, well, and Mike Mayo over at Wells, the other thing that he kept saying was, some of these executives were in charge of these businesses when a lot of these, misdeeds were happening. So the idea that they're going to get more money to fix and clean up what maybe they were overseeing when there was the problem, that's a little hard to square away. But I do think, the Great Resignation and this whole idea of lots of shifting folks moving around to different banks, they've got to keep the talent that they have. They need to have these folks clear-headed and kind of really focused on the task at hand.
And money does that, right?
And money definitely does that,
Sorry.
I think. So, I think, the prospect that your bank could just continue to get hit with mean regulatory
Mike Mayo's in my right ear, and he's like feeding me these lines.
Yeah,
No, he's not.
I love that. But I think Mike's points are good ones. Yeah. I think we'll see a lot from this bank over the next few months as they kind of finish up the initial reports that they owe to regulators. But it's definitely a big time at Citi. They've got a lot of work that has to be done.
Well, Jenny, just in the last 30 seconds that we have with you, Citi reporting earnings 8 a.m. on Thursday.
Yes.
What are you keeping an eye on?
I think loan growth, that's the big thing we're looking at for all of these banks. Is it coming back yet? Are people borrowing on their credit cards? Are corporations getting back to this? I don't know that we'll see that this quarter, but I think everybody's going to be listening to these executives. Will they see it this year? Is this a next year thing? When does that come back?
If it's low, those numbers, those loan growth, does it say something about the economic outlook, the market, or does it just say that banks are just being incredibly picky still?
I think it's a lot more about the demand side. I think, folks are flush with cash after all this government aid. And so I think it's a lot more about demand at this point, or at least that's what the banks keep saying to us.
So good. In leather. I'm just saying. I'm kind of loving the whole package. Jenny Serrain, she's a must-read here at Bloomberg, and this is, as we mentioned, one of our most read stories on the Bloomberg. Jenny is finance reporter here at Bloomberg News.
Let's get a check of the latest world and national news. Nancy Lyons is standing by in D.C. Hey, Nance.
Hey, Tim. We're learning today from a Wyoming coroner that hiker Gabby Petito's cause of death was strangulation and the manner, homicide. Teton County Coroner Dr. Brent Blue says he came to that conclusion after a thorough examination.
This autopsy included a whole body CAT scan, a examination by a forensic pathologist, an examination by a forensic anthropologist, and toxicology evaluation. So we pretty much covered all the bases.
Blue says they believe Gabby Petito's body was in the wilderness for 3 to 4 weeks before being found. Her fiancé, Brian Laundrie, remains a person of interest in the case and is still missing. Democrats continue trying to scale back President Biden's economic agenda to make it more palatable for moderates. House Speaker Nancy Pelosi appears to favor focusing on fewer well-executed programs rather than reductions in all the proposed programs.
We will not diminish the transformative nature of what it is. And it is Some members have written back to me and said, I want to do everything. So we'll have that discussion.
Pelosi admits they have some important decisions to make. Democrats must slim down a bill worth at least $3.5 trillion crafted by House committees last month to roughly $2 trillion, a figure that President Biden has floated as a potential compromise. Pelosi admits she's disappointed the level of spending will be less than $3.5 trillion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
And that is Nancy Lyons in our DC bureau. This story by Nico Grant of Bloomberg News talks about Google and its cloud computing division. They have unveiled some tools, Tim, to help clients monitor and reduce their environmental impact. It's part of the company's broader push to fight climate change. This, to me, speaks to what we really need to do is have more and more metrics when it comes to almost ESG in general, so that we can really measure what it means and have the same metrics, so that there's transparency and, you know what I mean, not different rules when it comes to what ESG or your carbon footprint, what it means.
Well, here's some of that transparency in action. So customers of Google's cloud computing division can now use a carbon footprint feature to see the gross emissions that are associated with their use of the Google Cloud platform. That's according to a blog post that the company released today. Google also is teaming up with Salesforce to let clients put their emissions data in the Salesforce Sustainability Cloud. That's a carbon accounting platform.
So it's interesting. The move following efforts announced last week to help users of Google's search and maps services reduce their carbon emissions, say by taking flights or driving routes that will cause less pollution. The internet giant, which also pledged to stop funding climate change misinformation with digital ads, has set a goal to become carbon-free by 2023. It currently runs on 100% renewable energy, became carbon neutral in 2007. Companies declared its cloud, which delivers internet-based computing and storage to other organizations, to be the world's cleanest. A difference between carbon neutral, right? And, you know, really being carbon free.
This, I think, is also from a marketing perspective and a selling perspective, right? Yeah, the company announcing it in a blog post,
You're
right?
so skeptical.
But I know I am. But it's
Just
all
kidding.
the cloud wars are intense, right? You have AWS. You, of course, have what Microsoft is doing with Azure.
My cloud is organic.
Carol printing out paper.
I'm so
I
sorry.
do too.
I know, I'm terrible.
It's recycled paper.
I know.
It is.
Still.
But you do have these companies duking it out for these clients, and if they can go to their clients and say, "Hey, this is what we offer in addition to our cloud computing power, come with us." Right,
and especially as there's more and more scrutiny when it comes to companies, their footprint, their carbon footprint, who they're working with, and so on and so forth, the whole supply chain. Maybe this is why this makes a fair amount of sense. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P very close to the lows of the day. Stocks declining in a choppy trading session. Let's head right over to the First Word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the red right now, with the Dow currently down 86 points. S&P's dropped 9. NASDAQ is lowered by 20. The U.S. 10-year yield at 1.58%. Gold is up 5 points. Transports rise 133. And Bitcoin is down by 3%. Among the main 11 S&P sectors, real estate and consumer discretionary led. Telecom and healthcare were under pressure. And leaders to the upside on the Dow, Salesforce and Nike, while Amgen, Intel, and Verizon led to the downside. In other news, the Fed's Bostic said would be comfortable starting taper in November. LVMH said that Tiffany is doing well in Asia and the U.S., and Facebook held a test of its 200-day. Wrapping things up, Pinnacle Partners reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Mr. Maloney. And to hear live breaking news over your Bloomberg, type squawk, SQUAWK on your terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
We're running on a financial system that's running on old technology.
We're seeing house prices reach fresh record highs.
What unfolds in midterms, we will no doubt see again in the next presidential election.
The Big Take on Bloomberg Radio.
So this is among our most read stories on the Bloomberg, and it's got a stock moving as well. We're talking about diversified energy shares falling as much as 29%. That was actually over in London overnight. But let's get into this story. It is about the hundreds of thousands of decrepit oil and gas wells that you will find across the U.S., the role that they are playing also in the climate crisis. That story by Zach Miter. He's Bloomberg News Projects and Investigations Pulitzer Prize winning reporter. And it was also written along with Bloomberg News oil and gas reporter Rachel Adams-Heard. Zach joining us in our Interactive Brokers studio. So take us to Southeast Ohio and what you did and a group of reporters.
Sure. So Rachel Adams-Heard and I went out to kind of see firsthand this problem that we've been reading about in America with these old, decrepit gas wells that actually leak a lot of methane into the air. It's causing a big problem for climate change. And so we realized that there was this one company, Diversified, that owns way more of these wells than anyone else. They own more oil and gas wells than any other company in the United States, more than Exxon, more than Chevron. So we went out there to Ohio, West Virginia, and Pennsylvania, and we visited a bunch of their sites.
And what did you see?
So we brought with us an infrared camera that we borrowed. It goes for about $100,000. So we were actually able to see the methane spewing out of wellheads and tanks and other equipment in the oil field.
Why? Why does the methane leak out in these areas? I mean, what is wrong with Diversified's process that leads to this?
We don't know whether Diversified's better or worse than other owners of really old, low-producing gas wells. But in general, what the studies show is that these kind of old, low-producing gas wells are a big problem for climate because they produce so little oil and gas that the percentage that they're leaking into the air just from a pretty small leak can be 10 or 20%. So if you're over 3%, that's kind of the borderline where it's actually dirtier than coal to burn. And so if you're at 10%, you're way dirtier than coal. And so we went out in the field to kind of see if these problems we've read about in the research, if we could see any of the same kind of issues at the biggest well owners' operations.
And that's a yes.
Yeah, we found a lot of leaks. Yeah, and we took pictures of them, and you can see the video.
There's so many different aspects of this, but let's talk about what's going on obviously our climate. We know it's really troubling out there. We're talking about the release, though, of methane, correct? Which is much more problematic to the atmosphere or to the climate.
That's right. So natural gas is considered kind of a cleaner fossil fuel because burning it in a power plant produces a lot less carbon than burning coal. But natural gas itself, if you don't burn it, is a super powerful greenhouse gas. So if you leak enough of it out on the way from the well all the way to the power plant, if enough leaks out, even just like 3%, it can actually overwhelm the entire advantage of natural gas compared to coal.
And why did investors have this reaction today? Were they concerned about regulatory action as a result?
I don't know. I mean, I think this is a company that doesn't get a huge amount of attention. It's, I think, a couple, maybe $1 or $2 billion market cap. And it may just be that investors hadn't really focused on this issue before, and they were reacting to the headline.
I just want to note that diversified energy shares, as you mentioned, Carol, they fell as much as 21% off of your report, Zach.
Right.
Well, the one thing you do point out, though, in your story, Zach, is that when a well, right, when it runs dry, it has to be plugged. And you would assume that diversified has to do that, right? And that's a cost of doing business.
That's a big cost.
It's a big cost, right? But so you wonder, too, if that's maybe what investors are starting to think about. I mean, when you look at this story, I feel like, as I said, there's a lot of moving pieces. First of all, it's a company that we don't talk about a lot. Who knew that this was going on? But I think about the climate impact. Why is it that these wells, I mean, they're obviously worth something to this company, right? Because they're still getting gas out of it.
Oh, sure. I mean, in this company, you look at the share price, it's outperformed just about every other U.S. oil and gas company since it went public back in 2017. It's been a tough market for the oil and gas industry generally.
Right.
But these guys have really convinced the market they can make money in any kind of environment because, you know, they're not paying very much to buy these wells. They can run them relatively efficiently.
Right.
Take some money out. Take some oil and gas out and sell it.
What did you hear from Diversified?
So we engaged with them a lot over the past few months. They put a statement out today. You know, obviously they have a different view on their prospects than some of the people we quoted in the story. But you know, this is basically, I think partly this is about, you know, they say we're going to have plenty of money to pay dividends to shareholders, meet all of our obligations, and plug all these wells when the time comes, which they say might not be for 50 more years.
Right.
And, you know, we quoted some people who are skeptical that they're actually going to be able to pull that off.
It's just interesting, like I say, you think about the amount of companies that we talk about, and this is not one that's come up on their radar, but to understand Rusty Hudson, right, who runs this company and how many wells he owns, it's just really wild. And the big major oil companies, they don't want anything to do with these wells anymore, just quickly.
Correct, but in many cases, they're the ones who drilled them. So we went to former Exxon wells, former Chevron wells. There's kind of a food chain in the industry, and they end up in Diversified's hands.
It's a great read, and I highly recommend you check it out at Bloomberg.com. Zach Miter, thank you so much of Bloomberg News. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, it's Bloomberg Business Week. 29 minutes to go until we wrap up this trading day. But before that, we got to do the chart of the day.
I miss Dave Wilson, and he's back after 4-day weekend?
You know, Dave, he only does
3-day
like,
weekend, okay.
he only works like 3 or 4 days a week.
Yeah, right. If you watch Bloomberg TV,
he's on all the time.
He's on when you're getting up in the morning, and when you're leaving the office, he's still on. So he's here.
I know, exactly. All right, we're going to get to Dave in just a moment. Let's get back to Charlie Pellet, another one who seems to be here all the time.
We're busy people here at Bloomberg, and don't forget we've got the song of the day coming up with Dave Wilson. If we had a song of the day for the markets, it would be Wobble Baby Wobble. You know that party song. We've got the Dow right now down 71, the S&P down 6, and NASDAQ lower now by 7, a drop of 0.1% for the S&P 500 index. Stocks are falling. Choppy session as investors await the start of the earnings season. They're also weighing the risk of inflation as the Fed gets ready to reduce its pandemic-era stimulus. 10-year right now up 10.30 seconds, 10-year yield 1.57%. Spot gold up 0.4%, 17.60 the ounce, while West Texas Intermediate crude up 0.1%, 80.59 a barrel on WTI. So again, recapping here, S&P lower by 6, 10-year yield right now 1.57%. Cannot ignore Bitcoin dropping today by 2.7%, 55,780 right now on Bitcoin. Moderna and Johnson & Johnson made the case for booster shots of their vaccines before a key regulatory meeting later in the week. Merck's promising COVID pill already being snapped up by some countries, raising concern that poorer nations could be left behind in a repeat of the inequitable vaccine rollout. The pandemic has drastically changed the way that American hospitals are handling their patients. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security, and he spoke this morning with our Tom Keene.
So there has been really a reconfiguration of how hospitals are, everything from personal protective equipment to visiting hours, all of that has been changed. And hospitals are now just much more attuned to the threat of infectious diseases, because in the past they never really cared so much about them because it was kind of an afterthought. They were really interested in operative surgeries, and now they realize that they have to be resilient to infectious diseases.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names that we check for on a regular basis. Pfizer, for example, down 0.6%. Its German partner BioNTech up 0.3%. Those are the ADRs of AstraZeneca, down 0.8%. Moderna higher by 1.7%. J&J Johnson & Johnson down 1.5%. And that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg. Is the song.
Carol got nothing.
I'm thinking.
It's all on you, Tim.
Got nothing.
I'm thinking.
I'm going to cheat in 2 seconds. This is so up your alley.
Oh, this is Weezer. Is it Weezer?
No. So disappointed.
Billy Joe Armstrong would be so disappointed.
Oh, okay. Green Day.
Yes.
Got there.
How come the folks in the chat didn't help me out just now?
Yeah, Nancy Lyons. Nancy Lyons is usually really great about helping us out.
Well,
Charlie Vollmer
because
was
it's not a classic rock song as it so often is. It's a little bit more contemporary than that. Not a lot, but a little.
But this is newer Green Day.
Well, I mean, newer is a relative term.
Yeah,
I mean,
Dookie was
the song came out in 2009.
Okay.
Reggie says we are disappointed.
Yeah, everyone, constant theme of, 3:35 p.m. Eastern time.
Come on, guys.
Disappointment?
You could have given us a little hint.
Well, that's just as well because it's a theme of the chart today, too. So, that kind of works to your advantage.
Losing?
Yeah, disappointment.
Disappointment.
Right?
Okay.
And what I did is kind of look at earnings pre-season, as you might call it, for the S&P 500. Between mid-September And the end of last week, you had 21 companies report, hence the 21 guns reference. There you go.
Clever.
And out of those 21, 12 had falling stock prices in the first trading day after the results were released. I mean, some notable examples: Nike, FedEx, CarMax, need I go on? In any case, you're talking about, for the entire group of 21 stocks, an average decline of 1.2% and a median drop of 0.7%. So either way you looked at it, let's just say the preseason produced a losing record for S&P 500 companies that were reporting. And it's not like a football preseason where the games don't count. Certainly all these earnings reports count when you're looking at these companies. So arguably there's a bit more significance to what we're seeing than what you would get, say, in the National Football League. But I digress. I'll just tell you, if you haven't seen this chart already, send it. I'll send it to you. Just get me your email address. You'll get the chart, the explanation that goes with it, and everything I do going forward. My email address, if you want to send it, is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
The only thing I would say is, the market environment's been a funky one. Since the start of October, the S&P is up about 1.1%, but prior to that, we know September was kind of rough. So I'm thinking if you were reporting into that selling, I wonder, I don't know.
Yeah, that's
did they get caught up in some of the malaise?
That might well be the case, but you want to talk about getting caught up. Let's not forget my chart from the other day where we pointed out for the 5th quarter in a row, analysts raised their earnings estimates on S&P 500 companies during the quarter for which they would be reporting. So in other words, the 3rd quarter estimates went up in the 3rd quarter. So, in other words, there is more room for disappointment that comes out of what the analysts are doing as opposed to sort of lowering the bar so companies have an easier time stepping over.
Good point.
All right, stay tuned. We're about to be in the thick of earnings season starting tomorrow, of course, with JP Morgan. Dave, give us your stock of the day.
That's HubSpot. It's in the business of customer relationship management, marketing and whatnot. They're having an investor day today, and among other things, they introduced an online payment system that works with their software. Piper Sandler, among others, like the idea. They're talking about how it may fuel the company's growth. So clearly, they're not the only ones who like it, because you look at HubSpot's shares, the ticker is HUBS. They set a record in today's trading. At one point, they were up more than 19%, and they managed to hang on to most of that gain. At the moment, they're up more than 12%.
Stock has almost doubled this year, up 93%.
Yeah, it just goes to show you,
$36 billion market cap.
Yeah, it's been on an absolute tear this year.
It certainly has. And it's one of those companies that still flies under the radar.
Yeah, you can check out Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter. You can find him at The One Dave.
21 buys, 3 holds, 1 sell on that.
21, there's that number again.
There you go. Nicely done, Dave Wilson. All right, off to Nancy Lyons we go in our D.C. newsroom. Hey, Nance. Where was your help
Carol.
on that last
The House is
one?
converging on Washington to vote on raising the debt limit. Bloomberg Washington correspondent Joe Matthew is following developments.
This is the actual day that this will be codified in the House, and we do expect a vote on that bill would raise the debt ceiling by about $480 billion and last until December 3rd. Expect that vote at some point this afternoon.
Matthew says it's likely to pass with just Democratic support. The International Monetary Fund is expressing concern that the global economic recovery has lost momentum and become increasingly divided. The IMF's Geeta Gopinath says you're seeing that divide as inflation takes hold.
Food prices have increased the most in low-income countries where food insecurity is most acute, adding to the burdens of poorer households, raising the risk of social unrest.
Gopinath says despite the concerns, the IMF is sticking with its prediction for a robust rebound from the COVID-19 recession. The coroner in Teton County, Wyoming, Dr. Brent Blue, has announced the cause of death in the autopsy performed on Gabby Petito, the woman who was on a cross-country journey with her fiancé.
The Teton County Coroner Office is following the following verdict in the death of Gabrielle Lenora Petito. We hereby find the cause and manner of death to be the cause, death by strangulation, and manner is homicide.
Blue says Petito's body was likely in the wilderness for 3 to 4 weeks before being found. Her boyfriend, Brian Laundrie, has been missing for nearly a month. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Nancy Lyons with World and National News. This is our most read story on the Bloomberg at this hour. ARK Investment Management's Kathy Wood betting that St. Petersburg, Florida can become the next buzzy destination for technology firms and saying that St. Petersburg wants to be the next Austin.
She touted the low cost of living in the Sunshine State, which has no income tax. I don't know if you're aware of that. Everybody knows that. And push back on the notion that it's just a place for retirees. I'm going to make a joke because that's been a theme we've been talking about over the last year, is people fleeing states like New York and New Jersey, and
not just because they like the sunshine,
Texas
right?
And Florida. But this is a part of Florida that's different than the traditional areas that have gotten a lot of attention.
Yeah, that is true. She points out, and she was making some comments on ARK's monthly webinar today. She says many people think of Florida and St. Pete as a retirement home, and it's anything but that. Remember, ARK announced just last week that it will close its Manhattan office at the end of October, move its headquarters to St. Petersburg, which is on Florida's Gulf Coast in the Tampa Bay region. The relocation really highlighting the once overlooked area's growing appeal to Wall Street players, including the already established Raymond James Financial. They've been there for, I think, a while, and Dynasty Financial Partners.
New York firms have been looking to open satellite offices. They've been relocating to Texas. We talked about Tesla moving its headquarters. They announced that last week. But as a result, some of these areas have seen real estate prices skyrocket during the pandemic as tech workers have been moving there.
This is something I feel like you and I talk about. We talked about real estate already in yesterday's show, but we talk a lot about corporate real estate and and the result of the pandemic, how people are moving around. And, hybrid working has maybe enabled you to have a global workforce, because if people can work anywhere, global in a different sense, meaning it doesn't matter where you live, you can work for us. And you do wonder, we're seeing that financial migration. I mean, there's still a big financial presence here.
Oh, without a doubt. And I think there will be moving forward.
Yeah. So, what?
Remember when, Kathy Wood's ARK Invest, it's a relatively small firm. Even though it got a lot of attention last week when announced, it's got just a couple dozen people who are moving there, right?
Right, exactly. But still interesting.
Very interesting.
Because she certainly had become a big voice for kind of the new wave of investment.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A sudden acceleration to the downside here with the Dow, the S&P, and NASDAQ all declining. We've got 13 minutes to go ahead of the closing bell, but definitely a new leg lower here. Right to the numbers. S&P down 16 now. That is a drop of 0.4%. The Dow down 153, down 0.5%. NASDAQ Composite Index down 38, drop there of 0.3%. NASDAQ 100 Index down 0.5. Russell 2000, an up day, higher by 0.4%. Dow Transport's up now by 0.8%. Bottom line, stocks lower across the board with the S&P down 17, down 0.4 ahead of earnings tomorrow. J.P. Morgan Chase reporting bright and early, down now by 1%. Stocks falling in a choppy session. Investors are awaiting the start of earnings season. They're also weighing the risk of inflation as the Fed gets ready to reduce its pandemic-era stimulus. 10-year up 12.30 seconds, 10-year yield 1.56%. Stocks extending losses. Gold up 0.4%. Spot gold $17.61 the ounce. West Texas Intermediate crude $80.48 a barrel. So again, repeating the equity numbers: S&P down 17, down 0.4. The Dow now down 155. NASDAQ lower by 39. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It's 3:49 on Wall Street. This is Bloomberg.
The following is an editorial from Bloomberg Opinion.
Fumio Kishida won his new job as Japan's prime minister largely because ruling party insiders saw him as the safe choice. To have any chance of success, he'll need to surprise them. So far, Kishida has been circumspect about his economic plans, beyond offering more fiscal stimulus and vague promises to boost wages and redistribute income. This is hardly enough. Kishida should also be urging fundamental labor reforms, closing the divide between regular and contract workers, making it easier for women to have fulfilling careers, and widening the pipeline for foreign workers to come to Japan. And he should look for new ways to cut red tape and promote startups. How much he can actually achieve will depend on his party's showing in future parliamentary elections. But it isn't too soon for Kishida to announce his ambition. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, so just about 10 minutes left in today's trading session. Charlie Pellet really summing up well. We're seeing some selling into the close, although, again, we are bottoming out here, but we are near our lows of the session here on the equity trade. Let's get to it with Alan Zafran. He's founding partner and co-CEO, at IEQ Capital. He's on the phone in Foster City, California. Alan, nice to have you back here on Bloomberg Radio. So we're watching this market trade. It's going to be a big week for earnings. What's of interest to you when you look at kind of the churning that's going on? Because it's almost an even split if I look at the S&P 500, a little bit more selling when you look at the names that are losing ground today versus gaining ground.
Carol and Tim, thanks for having me on. I'm glad I'm the chief of many things, apparently.
Sorry, did I add some titles?
I love it. Give me all more.
Congratulations on your promotion.
Exactly.
No,
HR is knocking on the door. Alan,
I got, there's two, I think, major trends impacting the markets. One is this question about, is inflation going to be transitory or here to stay? And that's an issue we can talk about, because if you have inflation, there's a worry rates get too high, and this whole market was built on rates. And then the second thing that's not being talked about, I just think you have intra-market leadership changing. And what really has happened, we just got through what I think is the early cycle of the economic recovery, and we're transitioning into what we call the mid-cycle. So if you think about it, you know, we had this horrible recession back in March of 2020 and all that horrific human loss and all the illnesses and everything. But coming out of it from a classic economic perspective, when you have an early cycle recovery, you get a combination of earnings growth and valuations going up. So multiples expanded and earnings expanded. And we're now kind of past all that. So in the early stages, your small caps do well, value does well. Now you're transitioning into this mid-cycle. And the mid-cycle means earnings growth rates are peaking. Valuations have peaked. So valuations are going to start going down, but you're still having earnings growth. And probably growth enough to beat the compression in multiples. And so what's happening is there's this battle, and typically you rotate from the small caps and value stocks towards the mid caps and frankly large caps. And you're now starting to look for companies that are going to grow regardless of economic sensitivity. So you get towards tech and healthcare. You get away from the small caps. You get away from the deep cyclical businesses. But it's a churn. And this is the ugly churning happening right in the middle of September and October when the world's always rough, right in the middle of a big debt fight and tax hikes. It's just kind of a combination of all this at once is really hard to fathom out. But if you take a step back, you either decide inflation's here to stay or it's transitory, and you decide we're in the middle of this transition into a long-standing bull, or yeah, this is the end of the market, the bull market. I don't believe that. I'm in the first camp. We're transitioning into a mid-cycle. We're going to have some ups and downs until it's clear that inflation is transitory, and that might not be clear until the early part of next year.
What are the data that's telling you that, Alan?
Well, what's telling me that is if you kind of look at the stuff that's gobbling up the inflation data, a lot of it is these big, bulky things that get stuck in on the ships, on the ports. So it's new cars and used cars and rental cars and video and auto equipment and RVs and sporting equipment and furniture and housing appliances. And those kinds of things are going to work through the cycle. The question is, are you really seeing wage inflation that's permanently going to sit there? And I don't think that you're going to see that at all. I think you're going to see continued challenges, even in trying to hire people. I still think there's so much productivity growth and there's so much use of technology. I think people are still going to clamor for the good jobs, and we are going to be able to ultimately find people. And I think where there's the rapid wage gains, a lot of it has been in the low-paid group, the hospitality workers and leisure workers, where there's a real shortage. That's not really going to drive up economic inflation to the point of being problematic for the markets. So I think it's going to diminish when we get into the latter half of next year.
But the big question still out there is if we get some kind of, fourth wave, another variant. I hate to be such a pessimist. It's not who I am, but, the pandemic, we thought there'd be a bounce back, we'd get vaccines, and we'd all be back to normal. It's not such a straight line. We see that. If we continue to have some problems, certainly when it comes to variants or COVID, that, Alan, will continue to impact those supply chains. Maybe workers can't go back to help produce, the necessary products that are in demand. And that, as a result, could keep that transitory inflation, maybe still transitory, but transitory a little bit longer.
Yeah, I would agree with that. But let's think about that from the stock market perspective. A market that is market capitalization weighted, meaning the companies that are largest move the markets the most, and those are all large cap tech companies that largely grow, even in a pandemic-driven world. So as bad as that's going to be, it's going to continue to worsen all this socioeconomic divide. It's probably not going to be that devastating for the stock markets. The big cap, large tech names that are growing aren't going to get that devastated. And so I think you're going to see a continuation of, at worst, a sluggish market. Sure, you can get brief dropbacks, but there's too much liquidity in the system. And I think it's inevitable that the inflation eventually mitigates away, and the risk asset prices in a world of low yields work their way higher. They just do. It's just going to be sloppy between now and when we have visibility. And that's probably 3 to 6 months out.
And I think many people would argue it's a stock picker's market. So just before we let you go in the last 45 seconds that we have, give us some ideas.
Well, again, I'm going to harp on the fact we've moved away into this mid-cycle. So I still think it's really early to look at when you get to the end cycle, you look at utilities and consumer staples, you're way too early for that. On the flip side of that is the easy money's been made in the, low quality hotels and restaurants and deep cyclical businesses. So play in the middle. Look for mid-cap and large-cap growth, steady franchise names where there's real earnings growth. The valuations could be, it's really GARP, growth at a reasonable price.
Right.
Stay away from the high flyers and stay away from the junk. Play it in the middle with strong franchises.
All right, Alan, thank you so much. Great to have you back with us. That's Alan Zafran, a man of many titles, and I was giving him a few more. He's founding partner and co-CEO at IEQ Capital on the phone from Foster City, California. But I always love it. It's very thoughtful in terms of the research. He shares with us a ton of research, so I always feel like we go into this knowing a lot and learn so much more when he joins us.
Yeah, always great to have Alan join us. Well, we are just a couple of minutes away from the market close, and stocks are lower, but now a little bit higher.
Yeah, exactly. Down still 10 on the S&P, Dow off 118, and the NASDAQ off 17. Let's get to it and join our Bloomberg TV team for Beyond the Bell on radio, TV, and YouTube, counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs, counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast with Carol Masser and Tim Stenovic, bringing together all of our audiences across television, radio, and YouTube. And Carol, interesting day here. We are flat right now on the S&P 500. You got 5 sectors in the green here. Unfortunately, it's not any of the sectors that would normally lift us higher, like technology and financials.
It's an interesting day, and again, I can't help but feel that we're all waiting for the earnings reports to really give us some set direction when it comes to the market trade. I just have to say, though, you guys say we have all the fun over here on radio. I saw some popcorn being passed around earlier, so a little levity that you guys were having.
Yeah,
Tim, I was jealous.
I was too, yeah. I mean, I hope you saved some for us. But look, I think the theme of the day was really hurry up and wait. Stocks struggling for direction much of the day. Took a leg lower later in the show, and later in the day, I should say. And we are seeing them off their session lows right now.
Yeah, it's interesting when you talk about levity. You could talk about short end bond yields, of course, that are rising. As Caroline is so smartly pointing out that after the 10 auction, you're sort of seeing yields come down. You speak, though, Carol, of levity. You have to be careful because Romaine is popcorn. He tends to throw it. So we are trying to make sure we hold him back.
I'm going to give my executive producer a heart attack here. He said we can't have popcorn on the set.
Aaron is so
But it's
angry
Tuesday.
with you.
What other day are you going to have popcorn?
Kudos to Mike Mayo. He brought it in. He was talking about what one of the most
seasoned popcorn.
Yeah, black pepper. I thought perhaps, Tim, this is one for you. I know you keep your eye on AMC. I thought maybe he was just trying to give a little bit of help me out there to some of the theaters.
All right, well, we're getting the closing bells here. Unfortunately, not going to be much popcorn thrown there. People clapping, the bell ringing, 112 points down on the Dow Jones Industrial Average right now. That's going to be good for about a 0.3% decline here on the average there. The S&P 500 down about 11 points here, or about 0.2%. The NASDAQ composite right now is going to finish the day lower by about 0.1%. Russell 2000 going to finish in the green by about 0.6%. Look at Apple. What's happening?
Yeah, stocks down 1% here in the after hours. Headline just crossing the Bloomberg. Apple is likely to slash its projected iPhone 13 production targets for 2021 by as many as 10 million units because of prolonged chip shortages. This is according to people in the know. Company had expected to produce about 90 million new iPhone models in the last 3 months of the year. Now telling manufacturing partners the total will be lower. They're talking about Broadcom and Texas Instruments struggling to deliver enough components. Guys, this is something we keep hearing from anyone who's involved in the tech space and just elsewhere, because we know chips, those electronic components go into so much out there. Stock now down about 1.5%.
And this is significant that we feel the ripple effects, whether it's the IMF discussing supply chain issues earlier today, whether we're going back on the precipice of earnings to start to hear how that's going to be impacting things. The story of the last day, the last week, the last month has been how hard is it to get what you're making through the supply chain at the moment. Apple, of course, had been managing to do it relatively well, succinctly managing to have, of course, it was the autos where we really felt some of the pinch points, but the fact that the biggest phone maker in the world is feeling the pain from the likes of Broadcom, that's significant.
Yeah, and I mean, the other thing, too, they mentioned in the story here, and we should point out a lot of this based on people familiar with the situation, but the energy crisis also playing into this as well, and the effect that it's had on some of the Chinese factories. This is a big deal here because we've heard guys from a lot of companies that have said, yeah, they're dealing with some of these issues, but they're actually manageable. And now you have a major manufacturing, probably, I guess, arguably what is probably one of the best managed companies when it comes to supply chain, basically saying that it right now does not have a complete handle on its supply chain.
You make a really good point, Romain. I mean, that is exactly what Tim Cook's background is. He's a supply chain guy. He's an operations guy. So if there's one person who can manage this, it's Tim Cook. And throughout much of the pandemic, they have been able to manage this, but this showing that this is not something that even the biggest companies are able to
Have they, though, to a certain extent? The iPhone 13 Pro, iPhone Pro Max, they went on sale in September, but many have felt that they wouldn't be delivered via the website for a month or so. It had been already weighing on their ability to ship to a certain extent. The watches, many felt when they had their previous announcement that the watches were perhaps being slower than many had anticipated get to the market. So they'd already perhaps just been around the edges having these issues. Now it becomes blatant.
And looking at some of the other players, we're looking at Broadcom and Texas Instruments here in the after hours. They're little changed. Actually, I think Broadcom is now down about 0.5%. But what's interesting is you guys say this is the company, the ultimate one that is in control of its supply chain, so carefully managed. But you do wonder when they start to have troubles, what does this mean in terms of certainly their numbers, but it also speaks to that bigger picture about economic growth more broadly, and we'll see what CEOs have to say.
Yeah, we'll keep an eye on some of the suppliers here too, like Skyworks, Cirrus Logic, lower here in the post market as well here. So it's not just the chip suppliers. A lot of those component makers, analog devices as well, Semtech, a lot of these companies really dependent here on that iPhone cycle, the iPad cycle to a certain extent as well. And if they're not going to meet their targets, Apple, this is going to have a huge impact on some of those companies as well.
And I want to talk about that iPhone super cycle because it was only Dan Ives at Wedbush on September 23rd, talking about some of the pre-orders and how strong the pre-orders were. And he was saying that while supply chain issues are a lingering concern, delivery dates look to be tracking in line with previous models. And so, Caroline, this certainly seems to be, and you wonder how analysts in the street responds to this, if this does indeed pose something a little bit more indicative of what really is going on with some of these supply chain issues.
Think about the administration's reaction as well. And I think this is what's interestingly pointed out in the story at the very bottom, talking about how the Commerce Secretary has been discussing this. Gina Raimondo, of course, tweeting about, well, the $52 billion that's going to be supporting chip manufacturing in the US, Tim. How much is this going to once again reinforce the desire for companies to bring it home?
Yeah, it's something we spoke about with Michael Dell last week. He reminded us that it takes 3 years to actually build one of these plants in a new location. We're only 18 months into the pandemic, so there's certainly a long way to go for that. But you have to wonder, does it provide an incentive for companies to onshore some of this? I do want to note, October 18th is when we are expected to see some new products from Apple. I wonder what the timeline will look like on those. We're likely going to see new MacBooks, as we reported earlier today, as well as some new AirPods just in time for the holiday season. But what's shipping going to look like?
Yeah, and I mean, and the thing interesting, though, about that, too, is that you start to talk about sort of, the new product slate. What do you stand up there and announce? And can you sort of give a good timeline for when people are going to get these things? We're headed into a critical holiday season here where people are supposed to be loading up on a lot of these devices. And if you haven't bought them already, well, it's going to be some disappointment under the tree.
All right, let's check in with our Bloomberg Intelligence team. Anurag Rana follows Apple. Let's see what he has to say about this. So, Anurag, you've seen the headlines just crossing the Bloomberg. Apple poised to slash its iPhone production. It's because of that chip crunch. What does that say to you?
So, Carol, I completely agree with you. If Apple's going through these pains, think about what the others are going through. So I fully support what you just said. Now, think about it this way. If you are an Apple buyer, you're not changing it. You will remain an Apple buyer. So from my side, it just moves the shipments on to the next quarter or to the next quarter and forth. So it's not going to change what Apple is as a company. You're not going to have people, try to get to a different smartphones. But the problem is going to be for these other vendors that don't have that level of brand loyalty.
Anurag, it's interesting. Full disclosure, I'm a Google Pixel kind of a gal. And I actually got a new phone recently. It was really hard to get one from the likes of the big box retailers. I had to go to a Google store. That was the only one that was going to be able to provide it for me. Where are we going to see the retailers impacted by this? As you're saying, are you going to hold out or are you going to be able to buy it from Apple direct but not be able to buy it from some of the other vendors and the like? How do you see the ripple effects from Apple's own supply chain but Apple's own retailing?
I think a lot depends on how long is this bottleneck going to last. Does it really end up into the holiday season or not? I think that's where it can hurt some of the vendors, whether it's, the Best Buy, the Walmarts, and the others. But from an Apple's point of view, the shippings got pushed back by a few weeks. I mean, I've been waiting for my phone I mean, it's not going to come till another 2-3 weeks. And, even if I have to wait for another week, big deal. But you're right. If it goes into the holiday season, I think that's when some of the troubles start to occur.
Yeah, I mean, how big of a hit is it to Apple if that actually happens, Anurag? I mean, we know that this is the most important quarter by far for the company.
No, that's fair, but think about it this way. If they are going to do over 200 million units over the next 12 months, whether it gets shipped into the next quarter or the quarter after, do you really think it impacts a long-term, holder as much? It's a question is, do they go somewhere else? And I think that's where, our argument is an Apple, user is going to remain an Apple user. And it's not as if they're going to go and find another phone of, another brand anyway.
Well, that's true, Anurag, and we know we've seen the resiliency of Apple and, more importantly, the stock and the way the customers stay tethered to that system here. There are a lot of suppliers out there, though, that are dependent on these cycles. They don't have much loyalty there with regards to their customers. They're dependent on Apple, whether you're talking about the Qorvos of the world, the Cirrus Logics, the Skyworks, onsemi. A lot of these companies now are basically going to wait to find out what's happening with the supply chain. Can they recoup whatever is lost now in the future?
One comment I do have is the question at hand is, how do you fix the supply chain? And as one of your colleagues just said, this is not an easy way to fix it. It is going to take a few years to go out and fix this problem. And I think that's where the administration and even Apple management will have to figure out whether they start investing a lot more locally so that these things don't happen again.
Hey, Anurag, what does it mean, too, that, we've also talked about Apple doing, creating its own chip production and really controlling more of its supply chain? What does that do for a story like this? What does it do maybe for those initiatives within the company?
I think it is, that has been going on. I mean, the new MacBook that's going to come out on Monday, hopefully, from what we have read, will have that chip that is designed by Apple. I mean, it's not an Intel chip. So, those kinds of innovations are important because it does pressure the other suppliers out there. I think if Apple takes care of, end-to-end, a large portion of these parts that go into it, it's going to be less dependent on others.
Really appreciate those insights, Anurag Rana of Bloomberg Intelligence, all over that breaking news. Who else is all over this breaking news? Our very own Bloomberg, Mark Gurman, also joining us now. And Mark, I am curious, when you think about the pricing power of Apple, do they have the ability to further raise prices to offset maybe a lack of supply that they might not get this next few months, this quarter?
Pricing power, certainly, but they're not doing that. In fact, they're eating costs. Shipping is more expensive. Buying components are more expensive. Getting the phones in the hands of customers are more expensive.
We're having a bit of a technical issue, Mark. Hold that thought. We're just going to get you mic'd up perfectly, just so our audience can hear you with clarity, because, of course, Mark Gurman is the man behind the scoop on this story. And Romain, I know this is sort of an interesting one, is how much Apple's going to have to shift its business model, if anything at all.
Yeah, and Taylor, I mean, you could jump in here, too, because, I mean, we talked about this. We mentioned this October 18th event. I think Mark had actually reported it's supposed to be new MacBooks and a few other things. And you wonder, is it just an iPhone issue? Yeah. I assume this has to pretty much go across all of its products, or anything at least with the chip, right?
I think, as Anurag has been saying pretty unbelievably, and every analyst on the street, if there's a company that manages supply chains well, it certainly is Apple. And Mark, let's bring you back in here now that we fixed your mic, and maybe sort of hint on what you were talking about before, the pricing power of this company. Can they make up for any lost sales by raising prices? And then what do you see as the trickle effects beyond an iPhone?
So to answer your question, yes, the pricing power is extremely strong. If they raise prices by $50 or $100 a unit, which I don't think they're going to do, yes, they would be able to pull that off. But instead, they have been eating costs, right? Getting phones in the hands of consumers, shipping, freight is all very expensive right now because of the global chip shortage and, because of the outcome of the COVID-19 virus and its impact on the supply chain. Instead, they're eating those costs. At the same time, I think that they still are producing 80 million units here. I do think they will have enough supply for everyone who wants an iPhone. this holiday season. They're just not going to be able to make and sell as many as they intended to make. So clearly an issue here. And in terms of the questions regarding supply chain and how Apple could shift its supply chain, to mitigate these issues, well, what we're reporting is that the chip shortages are stemming from two main suppliers. That's Broadcom as well as Texas Instruments. So I don't think relocating the entire supply chain to the U.S. is necessarily the problem here, right? Foxconn is doing its job in terms of manufacturing these devices. TSMC is doing its job in terms of producing the Apple design processors. This is related to Broadcom and TI impacting Apple. So what we're going to need to see here is increased diversification in order to mitigate these problems. Now, the good news is that I think diversification is coming in terms of suppliers. That's because Apple is looking to move more of these components in future versions of the iPhone and other products to in-house designs. So Broadcom makes wireless components, and TI makes components related to the display. You can bet that these components that are at the heart of this issue are going to be replaced by Apple-made designs, maybe 3 to 5 years down the road, maybe even sooner depending on the component, which means Apple can have more control over who's doing the production and the overall design, and they can start building these earlier. So I think it's diversification of suppliers, diversification of component design that's the real need for change here, not necessarily where final assembly is being done, whether that's China, Vietnam, or the U.S.
Mark, 3 to 5 years, that's many, many, many quarters away. Help us understand what this looks like 2 to 3 quarters from now, especially when Susquehanna is essentially saying that the signs are that the chip time is getting worse. Lead times in the industry are rising for the 9th month in a row to an average of 21.7 weeks in September.
Yeah, you've seen the impact. If you go to Apple's website right now and you try to do a delivery for pickup at one of their 500 retail stores, the vast majority of them have little to no stock of any iPhone 13 models, particularly the Pro and the Pro Max ones at this point. If you go to order one from their website, you're seeing 1 month plus shipping estimates. There's also going to be the new MacBook Pro next week, and you can imagine there'll be supply constraints there. I've noticed that the Apple Watch Series 7, also no shipments until mid-November, all the way into December, even January in some cases. You're seeing the same thing for the new iPad mini as well. You're seeing a bunch of current Macs that are not going to be updated, also facing supply chain issues, and the iPad Pro has been facing supply chain issues as well. If Apple's not able to produce the products that people want to buy, that is for sure going to impact their earnings. Analysts are estimating $85 billion for the fourth quarter and about $120 billion for the first quarter of 2022. Apple, of course, they typically hit those numbers, but the supply chain crunch may make that difficult. Yeah. This is part of the reason why, for several quarters in a row now, Apple's not guiding, because there is, all this uncertainty and all these moving variables in the market right now.
And Mark, how much are they fretting about that internally when you're speaking with executives or with sources? Do you know how much Apple is worried, or do they think they've got such brand loyalty they can weather this and you just push off some of the sales into the later quarters?
Yeah, I really don't think this is a particularly big long-term issue for Apple. For Apple, the future is long, and they're not necessarily looking or running the company on a 1 to 2, 3 quarter basis. I think the iPhone 14 next year is going to be a massive upgrade cycle, and the hope internally is that these supply chain issues would be fully mitigated by then. I saw the CEO of AMD talk recently, and she was saying that these supply chain issues are going to be mitigated, at least for them, by the middle of next year, hopefully. Other companies that produce chips are saying similar. But the good news, I guess, for Apple is that TSMC, which makes the main Apple chip, their trains are running on time. Foxconn is running on time. So it's the big one. These are two small component suppliers in the supply chain that are causing big ripple effects for the company. And perhaps Apple will have to make a mid-season supply chain change for component suppliers, expand to different component manufacturing partners. But I think they definitely have a plan in place. And right now we're seeing November, about a month from now, for iPhone 13 shipments. We'll see how that changes into December, and we'll have a close eye on that.
Hey, Mark, so we are seeing Texas Instruments, Broadcom, they are down in the after hours. Apple's still lower here. You're sitting down with the Apple execs. What would you ask them about this? What's the one question we as investors, our audience, has to be asking this company?
Yeah, are you rapidly expanding other suppliers for these key components, right? It only takes one component and a shortage to one component to sort of mess up your entire supply chain and ability to output these devices at the rates that you'd like to output them. So what is Apple doing about expanding its suppliers for individual components? I know they've been double sourcing or triple sourcing, but obviously that's not capable for every component. I think the one thing that some investors and analysts are missing is that this is not a problem in terms of final assembly and manufacturing related to China versus US versus somewhere else. It's about the individual component level. You have to understand that Apple sources components from hundreds of different regions, if not more, and thousands, if not tens of thousands of suppliers from around the world, whether that's the US, Europe, Asia, or elsewhere. So basically what Apple does is they bring all those components together, they tie it to their software and their hardware designs, and make it into a single package. And if there's one piece of the widget missing, that's going to cause supply chain issues, and that's what we're seeing here.
That's all it takes, and it certainly is playing out. Mark Gurman covers all things Apple for us here at Bloomberg News. Mark, thank you so much joining us from our West Coast. That's going to do it for expanded cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. Apple shares still down about 1.25% in the after hours. We'll see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So does this mean order your iPhone 13 now?
I guess, it's funny because I was thinking about it. I was looking at some of the shares of the carriers in the after hours because they've been pretty aggressive about go out. And does that, if you think about the Apple universe, as Mark was just saying, so many components go into the phone. And there's a great function on the Bloomberg that, who supplies Apple? Who does Apple buy for? And so you realize the infrastructure, the supply chain that Apple impacts, it's a big one.
It's massive. And Tim Cook is a supply chain guy. This is what he has done.
Logistics, right?
Hey, logistics. This is what he does. Hey, a lot of questions that I wanted to ask Mark, but remember when he came on, when the latest iPhone came out, he said, I just got this great deal from my carrier.
Right.
They pretty much gave it away for free.
Verizon's been kind of, I just got a new phone. I mean, I bought the last one, but it's interesting. I remember doing a World Economic Forum in India, and we were talking about supply chain. This was years ago, and I set up our panel and talking about Apple, the supply chain, the logistics. You order a phone, you can see when it was in China, you could, they were so specific about it being manufactured and when it would ultimately get to you, when it hit the ports on the West Coast. I mean, this is a company that understands. They make so many products. They understand their supply chain. So when they come out like this, and, this is just a bigger story. Chips are in everything. They're impacting so many different companies, including Apple.
Yeah, not just refrigerators and cars, guys.
Yeah, exactly. So anyway, this is going to be a story that we talk about into the certainly Wednesday trade.
Well, in the meantime, let's get a check of what the latest is with business news. Here's Charlie Pellet.
Hi, thank you very much, Tim. Let's reset here, bring you up to date. And our top story, Apple shares lower after hours now by 2.2%. After the close of regular trading, Bloomberg News reported that Apple is likely to slash its projected iPhone 13 production targets for 2021 by as many as 10 million units because of prolonged chip shortages. An ongoing story we've got you covered right here on Bloomberg Business Week. This update brought to you by Witham. More than CPAs, they are trusted advisors offering smart business solutions to help companies innovate, grow, and stay secure in today's complex world. Visit witham.com. Again, Apple shares after hours tumbling now by 2.2%. Stocks lower today as investors await the start of the earnings season, along with a report that is forecast to show consumer prices remained elevated. We're talking about the CPI report, 8:30 a.m. Wall Street time. Before that, J.P. Morgan's earnings report, bright and early tomorrow morning. Complete coverage, analysis, and reaction here on Bloomberg Radio, the kind of coverage you've come to expect over the years. JPM down today by 0.8%. S&P down 10, down 0.2% today. The Dow dropped 117, down 0.3. NASDAQ lower by 20, down 0.1%. Your 10-year yield 1.56%. Spot gold up 0.4%, $17.60 the ounce. West Texas Intermediate crude down 4 cents, 80.48 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
We just talked about Apple's cutting its iPhone production goal because of a chip crunch. I'm curious about the crunches that we're going to see in supply chains leading up to the holiday shopping season.
I mean, we've kind of joked about it a little bit, in the sense of executives coming on our shows and saying, "Hey, do your Christmas shopping now." Well, that's kind of like we're saying, okay, well, you got to take it with a grain of salt. Are they talking their book and telling you to go buy right now? but it's legit.
No, it is legit. And, you know, I was talking to my family this past weekend, and they were talking about holiday merchandise, though, in particular, already out in some of the big box stores. It's not even Halloween. Anyway, someone who's got a front row seat to all of this, especially when it comes to shopping centers around the U.S., is Tom McGee. He's president and CEO of the International Council of Shopping Centers, a guest that we welcome back here on Bloomberg Business Week. Tom is on the phone in Basking Ridge, New Jersey. How are you?
Hi, Carol. It's good to be with you. Long time since we last talked. Look forward to being in the studio sometime soon.
Well, we look forward to having you back. I think it was around the holiday season. So what are the expectations for the holiday shopping season? What are you hearing from the retail and the shopping center community?
Well, our forecast is for a really strong holiday season. We're forecasting nearly 9% year-over-year growth in holiday sales from 2021 from 2020. You know, I think all the conditions that have led to strong retail sales during the course of this year, whether it's a lot of fiscal stimulus, high personal savings rates, you know, a strong job market, will all be the same factors that contribute to strong holiday sales. I do think, you know, the conversation that you were having prior to my coming on around supply chain and the impact that could have, you know, more broadly, including on holiday sales, is the big X factor. That would be really the only reason I would see not meeting kind of our optimistic forecast. I think the consumer is back; they're willing to spend, but supply chain issues, you know, could be the X factor that could impact that.
It's interesting you say that about consumer back, because we've talked about some sentiment indicators being down. When you say 9% growth in holiday sales year over year, is that because there's going to be higher prices? Like, what are we talking about? What does that metric really measure?
Well, certainly there's been inflation from one year to the next, but it's really driven more based upon, you know, volume growth. You know, and that was based upon a fairly strong, you know, 2020 holiday season. Although 2020 retail sales were down over the course of most of the year, last year holiday sales actually increased year over year as a lot of people leaned into holiday spending. You know, overall for 2021, we're forecasting 11.5%, you know, retail sales growth. Again, a lot of 2020 was way down. So, you know, I think it's broad based. You know, we're expecting about 5% growth in physical stores, about 13% growth in e-commerce, and a lot of growth in things like food and beverage as well, as people will continue to eat out.
I'm really glad you brought that up, Tom, because, you know, if we were doing this, if we were having this conversation 2 years ago in 2019, I think we'd be talking a lot about experiences. Last year, the conversation was all about actual physical things because people, you know, there was no vaccine. We were still kind of stuck inside to a certain extent. What is the mix this year with buying people gift certificates to restaurants, gift certificates to experiences versus buying physical things, especially if you can't get your hands on some of those physical things?
Well, yeah, I think the you know, predominance is people will be focused upon buying physical things. You know, outside of the traditional going out to eat and entertainment that, you know, upticks in the holiday season, and we think this will uptick significantly this year. But I do think there'll be an increase in gift certificates. Look, I think that there is, if we have the supply chain challenges that we think we may experience, I think you will see people continue to buy and spend, but they might buy and spend on gift certificates to allow that person that they're buying the gift for to be able to choose what they want in 2022. So you may see a lingering impact of kind of the positive spending in the holiday of 2021 positively impact retailers in the early part of 2022 as people redeem those gift certificates.
Hey, Tom, hang on for a second. We're just going to do a little bit of news, and then we'll come back and continue. We are talking, and we'll continue talking with Tom McGee, President and Chief Executive Officer of the International Council of Shopping Centers. They represent really all of the centers that we see across the U.S.
Have you done your shopping yet?
Nope.
Yeah, not even close.
Nope.
Yeah,
Nope.
You got,
it's not even Halloween.
I know.
I don't
Got
even
a
have
few
a pumpkin
days
on the
to do
stoop yet. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
We're talking investment strategy behind the scenes. That's what we do here in our interactive broker studio.
We got all the data on the terminal.
We're talking crypto. We were like 401ks. Coming up, though, we're going to continue talking about the retail environment because we've got Tom McGee. We'll get back to him in just a moment.
I don't think I've ever, I've been doing this for years. I've never been talking about supply chain issues like this, holiday season like this.
I know.
It's great because it gives us a lot to talk about, but the fact is there are dozens of ships off the coast of the ports of Long Beach and Los Angeles that are just waiting days to dock, and there's a lot of stuff on those ships.
What does it mean that won't be under the Christmas tree? We'll get back to Tom in just a moment. Let's get back, though, to Charlie Pellet waiting patiently. Charlie, I'm guessing you're leading with Apple?
Without a doubt. You guys talking about holidays, supply chain issues, and yes, that brings us right to Apple. Apple shares lower after hours, down 2.2% after the close of regular trading. Bloomberg News reported that Apple is likely to slash its projected iPhone 13 production targets for 2021 by as many as 10 million units because of prolonged chip shortages. You heard Anurag Rana, senior analyst with Bloomberg Intelligence, right here on Bloomberg Business Week.
It's not going to change what Apple is as a company. You're not going to have people, try to get to a different smartphone. But the problem is going to be for these other vendors that don't have that level of brand loyalty.
After hours, Apple now down by 2.18%. Stocks fell today as investors await the start of earnings season and a report that's forecast to show consumer prices do remain elevated. Alan Zaffron is founding partner and co-CEO at IEQ Capital. He was our guest right here on Bloomberg Business Week.
This is the ugly churning happening right in the middle of September and October when the world's always rough, right in the middle of a big debt fight and tax hikes. It's just kind of a combination of all this at once is really hard to fathom out.
Wall Street, meanwhile, laser focused on earnings. J.P. Morgan Chase front and center tomorrow morning. Alicia Levine is head of equities and capital markets advisory at Bank of New York Mellon.
The key issue is the loan book, and we have seen anemic loan growth across the banks for the last few weeks, actually for the last few quarters. And when you think about it, households are still flush with cash, and businesses are flush with cash. So where is that demand for loans coming from? That's really the next leg of growth here. So I would say be long, be strong, but be faded a little bit, only because we've had such a strong move here.
And J.P. Morgan Chase down today by 0.8% ahead of earnings tomorrow morning. 10-year yield 1.57%. S&P down 10, down 0.2. The Dow down 117, down 0.3. Nasdaq down 0.1%. Spot gold up 0.4. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to Tom McGee, President and CEO of the International Council of Shopping Centers, still with us on the phone from Basking Ridge, New Jersey. Tom, one of the things I've also wondered about, I know we talked a little bit about supply chains, but I have been curious about the real estate market when it comes to shopping centers. And I know it's been a story that's been around for a while. What are you seeing on that front when it comes to vacancies in stores?
Well, I think there's an increasing level of optimism. Obviously, the industry was at the epicenter of, the pandemic and was significantly impacted by, all the health and safety measures that took place. But the level of optimism in the industry, and honestly, the level of leasing activity is really at its highest level in my tenure as the head of ICSC. We had a group of industry leaders together in Boston just a few weeks ago, and there was a great deal of optimism amongst the group. A lot of new store openings. Actually, store openings exceed store closings this year by 3 to 1 year to date. Obviously, 2020 was a different story, but you're starting to see a real releasing of a lot of that space take place. And we just did a study with Placer AI that looks at analytics of consumer behavior. And really, foot traffic is, generally speaking, both in the open air segment and also in the mall segment, back to pre-pandemic levels, close to 2019 levels. Wow. And so, you're starting to see a real emergence. That's not to say that there aren't challenged properties.
Yeah.
The U.S. is a big country, and the challenges in the mall sector in particular, which gets a lot of attention, is the most obvious. But within the mall sector, there are some exceptionally strong properties, and then there's some others that will continue to be challenged and may eventually be repurposed into other uses. But generally, at least in my tenure, this is the highest level of optimism I've seen, which might run a little counterintuitive to what a lot of people expect.
Well, what is that optimism based on in terms of the vision for what a property like this looks like in the future? A mix of retail, a mix of experiences, a mix of shopping, even in some cases, right, a mix of housing.
Yeah. Well, that's right. I think, I think that the industry is pretty big and diverse. And so the mall sector, a large regional mall is going to have a lot of what you just indicated. You're clearly going to see a move away from such a large percentage of leasable area from traditional retail into other uses. And we're seeing that happen pretty significantly pre-pandemic. And that's going to continue to happen towards food and beverage experiences, but also utilizing either pieces of the existing property, or for those that are more successful, adding on mixed-use components like residential and other forms of hospitality like hotels, et cetera. When you look at retail more broadly, I actually think that, again, perhaps counterintuitive, but you look at those retailers that have done exceptionally well during the pandemic, what they really learned was that the importance of the store, was pretty key to their success, because, the story around convergence of the online and digital world really took hold during the pandemic. And so you look at retailers like Walmart, Target, Costco, many others that are really using their stores not only as a traditional store where people browse for merchandise, but there are also many consumer fulfillment centers. And so, yes, people come for curbside pickup and click and collect, but they also ship from those stores as well, because it's a more efficient way to deal with the last mile. And even things like restaurants, you see them, you see convergence in that regard. I think of DoorDash and Grubhub and so forth. They're effectively delivering from those local restaurants to people's homes.
That's true.
So it's kind of a utilization of the last mile.
Hey, Tom,
the last mile.
One last question. Forgive me for breaking in. We've only got about 35 seconds left here. You're the International Council of Shopping Centers. Anything we should know globally in terms of what's going on? Just quickly, if you could.
Yeah, I think the same type of trends that you're seeing in the U.S. are happening around the world. Obviously, the mix of retail is different, but demand is fairly strong everywhere. Supply chain issues, are acute, not just in the U.S. but everywhere around the world.
Yeah, well, it's a global supply chain, right? We're all feeling the pain from it. Hey, Tom, I'm sure we'll be talking to you as we get closer to those holidays. Stay safe. Tom McGee, President, Chief Executive Officer of the International Council of Shopping Centers, on the phone from Basking Ridge, New Jersey.
Yeah, you got to do that shopping, Carol. Yeah, I do too. My wife and I were talking about it this week.
Online.
I know.
Sorry, shopping centers.
Well, yeah, maybe.
Maybe. All right, let's get back to world and national news. Over to Nancy Lyons. She's in her 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. A vote to raise the debt ceiling is coming up this afternoon, with House members rushing back to Washington, some of them opting to sign proxy forms. Bloomberg's Washington correspondent Joe Matthew is keeping an eye on it.
Speaker Nancy Pelosi sent a letter to her House members, her Democratic members, over the weekend, calling on all of them to vote for this bill, hopeful that some Republicans will come over, but it's entirely likely this will be a party line vote today, then it goes to the president's desk.
Bloomberg's Joe Matthew will have more at 5 p.m. Wall Street time when he hosts Bloomberg Sound On, right here on Bloomberg Radio. A coroner in Wyoming says slain cross-country traveler Gabby Petito died as a result of strangulation. The 22-year-old woman's body was found last month near an undeveloped camping area in remote northern Wyoming, along the border of Grand Teton National Park. Teton County Coroner Dr. Brent Blue says he's prevented by Wyoming law from saying much more about the case.
I can tell you the DNA samples were taken by law enforcement, and all I can tell you about remains is that the body was outside for 3 to 4 weeks.
Blue also ruled the death a homicide. Petito's fiancé, Brian Laundrie, is said to be a person of interest and has been missing for weeks. A federal judge says the Maryland couple charged in a plot to sell sensitive U.S. submarine secrets to a foreign government will remain behind bars for now. Jonathan and Diana Tebby each made brief appearances today in federal court in Martinsburg, West Virginia. Magistrate Judge Robert Trumbull ordered them to remain detained pending another hearing Friday. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So you are listening to Bloomberg Business Week. Carol Master Long, Tim Stinovic.
That's my dad's name, Tom.
Tom?
Yeah.
Well, is your dad joining us?
You know, everyone
Would
calls.
That be nice?
Yeah, it would be nice.
Come,
He's probably
Dad, you can
listening right
join.
now. He always texts. And,
Tom, you can
know.
join anytime. Come join.
He
come
is
join
probably
us.
listening.
Tim Stinovic, of course, my co-host. What were you going to say?
I said, you know, if people call me the wrong name, usually it's Steve, which is really funny because
that
my
what
last name, it's Tim Stenovic, so people often read it as Steve.
So Steve
I would say
Stenovic?
90% of the time I get called the wrong name, it's just Steve.
Steve.
So I embrace it.
I know as a kid, I remember like getting called out and they'd be like Carl Masser, and I'd be like
Definitely
mortified
not.
as a kid. I'm like, I'm a girl.
Well, we're thinking about another Tim right now, right?
Tim Cook. We mentioned Apple poised to slash the iPhone production goal due to a chip crunch, and we've seen Apple trade lower in the after hours. Another story by our Josh Idelson about Apple's CEO anti-leak edict breaking the law, that at least according to or alleged by an ex-Apple employee.
Yeah, you might have remember we learned about this in just a few weeks ago. Apple's restrictive employee handbook rules from a memo from Tim Cook. He made a recent pledge to punish leakers and people who are fired activists, I should say, filed with the National Labor Relations Board says that this violates U.S. law, according to a new complaint.
Yeah, it's interesting. I guess Cook, when he put out his memo, wrote that Apple was, quote, doing everything in their power to identify those who leaked. We do not tolerate disclosures of confidential information, whether it's product IP or the details of a confidential meeting. And this happened, this email he put out following media reports about a company-wide internal meeting the prior week at which management fielded questions about topics such as pay equity and Texas anti-abortion law.
Yeah, the filing today from former Apple employee Ashley Gajovic alleged that a September all-staff email from Cook violated the NLRA, which protects U.S. workers' right to communicate with one another and engage in collective action about workplace issues.
This is a tricky one. Apple, by the way, didn't immediately respond to requests for comment, so we've obviously reached out to them, but it's tricky.
It is. She was fired in September after filing complaints with the state and federal agencies.
All right. Check out that story at Bloomberg.com.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple shares now down 2.1% after hours. Sources tell Bloomberg Apple is likely to slash its projected iPhone 13 production targets for 2021 by as many as 10 million units as prolonged chip shortages hit its flagship product. Stocks fell today as traders await the start of the earnings season amid concern about inflation and supply disruptions that have brought havoc on industries around the globe. Tomorrow morning, bright and early, J.P. Morgan Chase weighs in. J.P. Morgan Chase today down 0.8%. Thursday, we hear from Citigroup, down today by 1.5%. Also Thursday, Wells Fargo down 1.3%. Friday, Goldman Sachs up today by 0.3%. Equities lower across the board. S&P down 10, drop of 0.2%. Dow Industrials down 117, down 0.3. Nasdaq lower by 20, down by 0.1%. 10-year up 12.30 seconds. 10-year yield 1.56%. Spot gold up 0.4, 17.60 the ounce. Bitcoin now down 3.2%, 55,477. Crude at $80.55 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So great way to wrap up what's been a really, really busy day. There's a new book out that notes that dogs have been getting, unfortunately, this is not the good part, getting sicker and dying prematurely over the past few decades because of chronic diseases. Tim, some of the same ones that are afflicting humans. So we're talking about cancer, obesity, diabetes, and autoimmune disorders and more.
It's a perfect time for this book and for Dr. Karen Shaw-Becker to join us, a veterinarian and author of the new book, The Forever Dog, Surprising New Science to Help Your Canine Companion Live Younger, Healthier, and Longer. Dr. Becker, it's really great to have you on the show. How are you doing?
I'm doing great, and thank you so much for having me.
So what was the moment that prompted you to write this book?
Well, it was twofold. I have a co-author, Rodney Habib, and he is obsessed with learning more about the oldest dogs of the world. So he was already in the process of making phone calls and tracking down the owners of these really old but incredibly healthy dogs, like significant outliers, dogs that were 30 years old, for instance. So when I knew that he was in this process, but my obsession actually is with
Did you say 30 years old?
Yes.
Oh my
yeah.
God. Okay, go ahead. Yeah, that's
I know.
staggering.
No, I felt exactly the same way. So he said, hey, listen, I'm going to go to Australia and interview Brian McLaren, who owns Maggie, a 30-year-old Kelpie. And I said, come on. So, of course, that piqued my interest. And so my big question was, were these dogs outliers, or were their owners intentionally doing key things that actually extended their health span and lifespan? So I'm pretty obsessed with the longevity science, being a doctor myself. So I was most interested in having these top longevity scientists reverse engineer these ancient dogs. So we came together and wrote the book, and it's been an incredible journey, and we're just so happy that it's out and available.
You know, it's funny. Earlier today, I'm getting ready to do a panel at Milken. Tim and I are going to be there out on the West Coast next week, and it has to do with longevity for humans. And we're talking about high tech and all these cool things, wearables that you can do to help as you age and kind of keep on top of things. But one of the points that was brought up was just diet and some basic things. And diet, when it comes to our pups, of course, as I feed my Scout bacon and other things, diet is
everything in moderation. Carol.
I know.
Scout.
That's what she says too. I mean, but diet, and we're learning more about human gut health, how important it is. But that's the same case for our pups.
It is so true. In fact, that was probably the most, of course, being a proactive wellness veterinarian, I am very well aware that your microbiome is incredibly important for facilitating health and longevity, no doubt. I was not aware to the extent that the microbiome plays into neonatal well-being. So puppies, getting that gut squared away early on is the difference between your dog having chronic gut issues and then in turn skin issues and potentially a whole host of systemic issues or not. And microbiome plays into actually mood and depression and anxiety. So that was a real eye-opener for me, too. And I do agree with you, everything in moderation. The frustration about dogs in general, though, is that we tend to give them the same ultra-processed food day in and day out, year after year. And that's where these longevity scientists said that we could probably be doing better by our pets by expanding the diversity in their diet, giving them less processed food and more real food. It's actually the exact same advice that our nutritionists, pediatricians, lifestyle people give us. Eat less, move more, eat more fresh food, eat less processed food is exactly what the scientists told us about how to grow an old dog.
So I definitely throw Scout a bunch of greens. We give her a lot of veggies. I mean, you're really talking about things like that, the things that are healthier for us. She likes avocado. I mean, that makes sense. Tim is laughing at me, but I mean, that's the kind of stuff that's okay.
It is. And I'm so glad that you bring that up because really the no-no list is no onions,
right?
No grapes. And of course, all the pieces that you would feed your own kids, like you're not going to give your dog the skin and the pit of the avocado because it's toxic and you wouldn't eat that yourself. So using a little bit of common sense, you give your 2- and 4-legged kids the apple, not the apple core. So as long as you're utilizing common sense when you open your refrigerator door, really the sky's the limit and it comes down to what your dog will and won't eat. But that's also a fun discovery, learning your dog's preferences.
So does that mean, because there are a couple different camps when it comes to what type of food and processed dog foods you should be feeding your animals, there is a real big movement right now and a lot of startups that are working on real pet food and feeding actual pet food that humans would eat as well. And there's another camp that says, hey, these are wild animals. They don't necessarily need what we eat. Where do you come down on that line, process versus human food
versus
versus
the stuff that they're putting in the fridge now, and they're saying it's really
That's
fresh
exactly
versus
what I'm talking about.
the crunchy stuff that I keep giving Scout.
Exactly. Thank you, Carol.
So, there is a massive movement really happening from the ground up. I think as pet parents become educated and they realize that the vast majority of pet food out there is what we call feed grade. It's made from not approved ingredients that failed human inspection for foods in the human chain, so it ends up in pet feed, and that's really what we're feeding our dogs and cats. So a lot of people have said, I also am aware that ultra high heat, ultra refined foods may not be the best for any of my family members. I am going to move towards a less processed diet. And so absolutely this movement has come about, and it's come about because I think people are becoming aware not just of the quality control issues within the pet food industry, but I think it's becoming a mission for that people recognize that eating a little brown crunchy ball is fairly similar to feeding your kids cereal all the time. And it's cool to eat some cereal. I think where the movement comes in is in recognizing the very common sense approach that all animals, whether it's 2-legged or 4-legged, any animal, they need variation and they do need some fresher foods in their diet. That animals fare best, their microbiome, their immune system, their physiology fares best eating some foods in a less refined state. So I weigh in. Yeah. I weigh in saying feed the best food you can afford to feed, and feed within the category of food, feed the least processed food you can afford to feed.
I love this in your book too. You talk about cooled teas, an economical and powerful way to deliver a plant's best medicinal properties directly to your dog. So there's lots of things. Maybe I'll be just putting something on Scout's kibble. That's a really smart way to do it.
Yeah. I'm so glad that you bring up teas because teas are such a cheap, easy way to give an incredible boost of polyphenols, antioxidants, phytonutrients, and it's really cheap. So if you use tea, of course, cooled over your kibble and let it sit for a few minutes, you can basically make a gravy that supercharges your dog's bowl. So that's a fantastic idea.
I'm thinking of some chamomile. She's a terrier. She's a nutcase. And so maybe I can calm her down, stop her from jumping on our dining room table and eating the spaghetti out of the bowl. It's like, don't do that. Hey, listen, this was fun. Good luck. Really engaging book. It's called The Forever Dog, Surprising New Science to Help Your Canine Companion Live Younger, Healthier, and Longer. I hope Scout lives forever. My husband, however, maybe not so much because she's crazy. Dr. Karen Shaw Becker, she's a veterinarian and author. She's written other books too, cookbooks too for dogs. So really cool stuff.
Very cool stuff. Hey, let's check in with Joe Matthew. Hey, Joe, what do you have coming up on Sound On in just a few minutes?
You know what they say, if you want a friend in Washington, get a dog. And that's going to be the case for a lot of people later on. They're going to vote, they say, to raise the debt ceiling. It's the House this time. We'll have all the latest for you from Capitol Hill.
Looking forward to it. Joe Matthew with Sound On coming up in just a moment. For Tim Stenovic, I'm Carol Massar. Have a good evening, everyone.